All right, welcome back to Metropole Television. You can hear the conversations are still even going in the background, even when we are on a break. Now, Anthony, let's address the biggest question that Gabriel is posing to you this morning. I mean, when we look at the biggest contributors to your growth in 2021, motor and medical are the ones that are leading at 62.3%. That's a huge growth point from quarter two of 2020. But again, when we come to the biggest losses in terms of that change from quarter two of 2020 to quarter two of 2021, you'll find again the motor and medical are the ones that are leading again in terms of the places where we're getting losses when it comes to that underwriting. Explain that big contrast. How do we understand that figure?
Let's first of all, and I think if I can just take one step from what Gabriel has said, I think I must admit that there are some issues that we need to address.
Yes.
Very well. The whole issue of that we are watchers perhaps from the sidelines in terms of when it comes, even motor vehicles. I mean, we don't own garages, we don't own hospitals. So those are breeding areas for insurance companies.
Yes.
And I think I keep on saying, and even when I meet with the industry top dogs, that we perhaps need to have a rethink. I know the Insurance Act will not allow us to be able to double into garages and hospitals, but I think you can be able to think around that problem.
Yes.
Because you cannot be able to sit in a business that you have absolutely no control. Now, one of the challenges that, of course, you have mentioned in terms of those big claims in medical and motor vehicle is, first of all, let's admit that those are the largest segments of our industry.
Yes.
So obviously, they will definitely also show the biggest breeding points for claims, medical and garages. So I'm not too worried. I'm worried about, not that I'm not worried about the figures. I am, but the fact that the two of them are the leading in terms when it comes to issues of claims is because they are also the largest segments of our industry.
Yes.
Motor vehicle, I think both private and commercial may be almost constitute something like 60% of the business available in the market. Now, one of the key issues that I think perhaps we may need to discuss with hospitals and hospital owners and everybody else is this whole issue of confidentiality and everything else. And the fact that we don't have a very clear policy like you'd find in some economies like South Africa, where if you go for surgery for a particular, let me say, a knee, in one hospital it may be 200,000 shillings.
Yes.
The same knee in another hospital could be double that much. Right? So we must start having a conversation with whoever is in that space, that we must be able to regulate and standardize some of these costs, because unless we do that, then at a point in time they also realize that underwriters are also business people. It will reach a point where they will be able to say, sorry, we are not able to take these businesses.
Yes.
Then what is going to happen also to hospitals? Not many people can afford out of pocket monies. Right? And therefore, I think it is time, and I agree that we must be able to start have that conversation.
Yes.
With the medical practitioners, with the hospitals in this country, with whoever, even garages, so that we are able to know where are we breeding and why. Why would the cost of a bonnet, for instance, in one particular garage be 50,000 shillings, and the same bonnet for the same vehicle model be 80,000 shillings in another, right?
Yes.
In another garage? It is common knowledge in these countries that if you walk into a hospital, and these are days with tremendous respect to our hospitals, I know they're doing a great job, but there is some instances, even garages, there are some instances if you walk into your garage with your motor vehicle today and you say, I'm a cash payer, the cost of repair in your car, if you are paying out of pocket, may be almost 30 or 40% what an insurance company would charge. So there we have some work to do. I think what is giving me hope is the adoption now of technology, because technology at some point in time will be able to capture those things. We will be able at some point in time to be able to put our figures in these systems, and then the system will say, look, this same bonnet, the same car, you had actually repaired this particular vehicle, or this person, you saw him in or her in hospital, and the cost of the same treatment or the repair was, today now it has increased by 50%.
Yes.
Why? Because of now having a bit of manual systems. That is not possible. But in the era now we are going into in terms of adoption of technology, and you have even said that Canadians and Gabriel talking about us adopting technology. That to me would be an issue of the past. We have suffered but it is not for long. The other thing I also want to mention is that when you look at even the South African market, which we have always talked about is the largest, if you remove the funeral cover, which is perhaps because of their background in terms of AIDS, everybody adopted a funeral cover.
Yes.
It is sold in supermarkets like you'd buy a packet of Unga. If you remove the component of funeral cover in South Africa, perhaps they will be number 3 or number 4 or 5 in insurance penetration in this country. So
yes.
Kenya, I still believe that is very, very viable. Considering also our economic progress, and as the middle class continues increasing, you will find that actually a lot of our businesses is now also in property.
Yes.
So I sometimes when we are comparing ourselves with Southern Africa, Zimbabwe, and all those issues, I'm not too worried because removing the funeral cover, we could be ahead of them. Now, we are adopting ourselves,
yes,
the funeral cover in this market. Now, I think every other WhatsApp group now is almost, now we have even covers catering for WhatsApp group members for funeral covers. And people have embraced, because that was a habitual issue, is a taboo issue, we couldn't talk about it before. It is now coming to an end.
Yes.
People now are able, we have buried enough people. Until now, we must be able to talk about death.
Yes.
And it's no longer taboo to talk on the table. It's no longer taboo now to tell people, when people die, we need to have a solution to this. So I think as we continue embracing, first of all, remove these taboo issues that we had, adoption of technology, and the awareness that our people are having, I can only see better times in the coming days. But do we have issues? Do we have challenges? Yes. Absolutely. There are many, and I think some of them have been highlighted. I don't want to go back to them, but we are surmounting them.
Pretty much. Anthony, I'll be coming back to you because there's also the big elephant in the room, regulation of that particular industry. Now, Adelaide, let's also look at that. You hear exactly what Anthony is saying, that indeed there could be issues, but then we have positioned ourselves better as an industry for proper growth. That's what is a takeaway from Anthony this morning. But then Adelaide, let's address it, and I'm going to ask you to just mention 2 areas that you think that you've seen a shift in the way that the industry does its business in the technology perspective. Adelaide, if we have positioned ourselves for growth again, then the economy is now growing at numbers we saw decades ago. I mean, when we're talking about 10.2%, that's a huge margin of growth. You like to think then that the insurance industry is embedded within that growth, but then again, it appears it's not. So when you say you've positioned yourself properly for growth and the economy is growing, but the numbers are a big offset, Adelaide, could you paint a picture on exactly what you've seen run different in a 2021 in the insurance industry, and then make sense of this 2.3% for anybody listening to this morning saying, yes, but?
Yeah, so I think coming into 2022, there has got to be a much more serious focus on how we as an industry use big data.
Yes.
There has been a serious lack of data miscoordination within the industry, where there's a lot of mega data available to help the industry deal with its claims a lot better, deal with its product design a lot better, deal with its service delivery a lot better. But we have just found ourselves scattering about in the mist, trying to make pieces of it. If you look, for instance, I applaud Aki with the digital certificates. It's something that has helped ease distribution of these of certificates and ease the access to insurance cover. We have seen some insurance companies now selling some of these policies with ease, and this is being interlinked with our national vehicle service, where we can be able to get data, KYC data, quite easily, but at a small cost.
Yes.
So we need to see this kind of correlation big data to be able to start creating innovations that actually make sense, that can actually attract better investments and make Gabriel a lot happier. We need to see government insurance companies, especially the medical sphere, having this mega data on those who are vaccinated and those who are not. And this information should be able to foretell the kind of risks that we're coming that are coming to play in regards to the medical products
Yes.
that we're going to design, the life products that we're going to design. We should have a very clear database on where all our actuarial modules are being simulated from, and the government has got to create this data more accessibly. Even if they want to commercialize it, it's fine, but they just give it a lot more access. And you will find now insurtech such as ourselves, if we start tapping into this mega data, then you'll find that the innovations will be supernatural, because there's access to information that you can use that can be able to give you a concrete baseline of how we can use technology. Technology requires data, and data is unfortunately still very much fragmented within the different spheres, and we cannot use this to correlate it together and make best decisions. So that is where I see 2022 going, where
Yes.
this data is now decentralized. It's distributed into different insurance companies. It's distributed even through IRA. IRA can be the spearheading board that ensures that this data is used with a lot of credibility. It's used within the fractions that it's supposed to create and spur that innovation. So where we definitely need to go right now is mega data, and also start looking at innovations to reduce fraud significantly lower.
Pretty much. All right, Washington, let's then also make sense of that growth that we've seen the insurance industry go through from Q2 of 2020 up to where we are right now. Washington, when somebody's going to ask you, if you look at the way that the economy is growing, they would like to think that at least now, in 2021, we were spoken about a penetration of maybe 3 point something or 4 point something. If indeed the economy did realize the importance of insurance back in 2020. For you, Washington, what is the drawback to that growth, if you will say?
Well, Elijah, like I said, I think sometimes now, do we really look at insurance in terms of not improving because the economy grew faster than the insurance uptake, or do we look at insurance, for example, insurance penetration or insurance improvement in terms of new people getting into the insurance sector, new people buying into insurance?
Yes.
We have more people who have bought insurance, or do we look, or do we judge insurance growth according to other parameters? Because I believe, what are the other parameters to measure insurance growth? Would we experience really a growth in insurance? I think that's something that I think we should even be looking at. Are we looking at really the correct way of measuring insurance growth? Because, I mean, that is what the fact that is compared according to the GDP, the growth of GDP, the growth of insurance, that is what we have. But to answer your question, Elijah, I think insurance, we can say there are several factors, limiting factors,
Yes,
that are making insurance actually according to the kind of figures we should be looking at. And you know me, Elijah, I'm always talking about the regulator not bringing in or not clamping down hard enough on what is happening in the insurance sector. Because look at it this way: we have, I mean, we have companies. I don't start naming companies. I don't know if you're going to allow me that. But we have companies right now that are still collecting premiums and they're not paying the claims. They're not doing their obligations. We have companies, last week, there was a company that had been taken to court. Why? Because they have refused to pay the garage, a service provider, the garage, to lease a motor vehicle to one of their clients. So they advise a client to go to court, which was, I mean, those are the kind of games you're talking about. How do these kind of games instill confidence into the insurance sector such that you're going to see the kind of growth you're talking about, because I can tell you, Kenya is a robust economy. The kind of insurance uptake that you have in this country does not reflect the kind of economic activity that happens. And one of the things that actually affect insurance uptake is lack of confidence in the insurance sector.
Yes.
And I always maintain, and Anthony can tell you right next to you, that 60% of the insurance companies in this country should not be operating. 70, sorry. 70% should be operating in this country. These are companies that are basically not interested in meeting their obligations. That's the biggest problem about insurance uptake in this country. And we can, let me tell you, Elijah, we can have these forums, we can talk forever, but as long as the commissioner does not do his work, as long as the commissioner does not shut down these companies, as long as people don't have the confidence in the insurance sector, Elijah, I don't think there'll be very little growth of insurance.
Pretty much. All right, Elias, just before we talk on that regulation front, because that's another bigger area, especially when it comes to the insurance industry in the country, for you, from what you said, let's close this conversation for penetration. I mean, all factors, when you look at how Kenya is poised, even in Eastern Central Africa, you would like to think that the insurance industry is also poised to grow within that economy. But then, Elias, we've been speaking about a single-digit figure for quite a long time within the economy. When are we bound to get to this coveted double-digit figure, especially when it comes to the insurance penetration? And from where you're sitting this morning, what is not ticking for a big economy like the Kenyan economy?
Yeah, so definitely there are a couple of factors, and we just need to kind of name those particular factors.
Yes.
And look at ways in which this could be resolved. So, for instance, we talk about lack of appreciation of insurance, and there are so many things that do affect that, particularly when it comes to the way the current customers being treated. Do they really receive value for their money?
Yes.
At the same time, that's a negative perception that the industry has. The second component is that we are not really going to the new grounds. And why do I say so? We still go for the traditional risks. That is what we are so much focused to provide cover for.
Yes.
And also the customers that we are reaching out. We are not going out to new customers. And that is another challenge, is that we are not breaking new grounds. And even the way of access and distribution in Kenya is very traditional. We are still using the same types of distribution. Yet currently people are talking about alternative channels of distribution that will provide reach and accessibility to different customers that we need to access. So there are a couple of things that need to be resolved, and that is a way that we can clearly be able to come up and raise that particular number. Then what really do we really need to do? We have so many things that need to be done, and one of the key things that needs to be looked at is policy and regulation. The Insurance Regulatory Authority has a mandate to also develop the market. At the same time, they have a mandate to ensure that there is market stability in terms of and are the companies ready to basically provide value to these particular customers. It's quite sad that if you get that a customer cannot be paid by an insurance company, then that becomes a very big challenge.
Yes.
But in terms of regulation, we've seen the insurance regulator coming up with a number of regulations. So for instance, when we talk about market stability, the insurance regulator released a regulation on capital, what we call risk-based capital. And that particular regulation was trying to solve the issue whereby an insurance company was required to have capital that is commensurate to the risk that it's carrying. Now, this regulation was supposed to be fully adopted in 2020. The COVID struck, and that regulation was not fully implemented. And maybe in the next couple of months, we should be able to see this this particular regulation coming into place and addressing some of the issues that Washington has kind of raised. At the same time, the regulators has come up with quite market development oriented policies and activities. So, for instance, we've seen the regulator going around the country trying to sensitize the public about insurance. We've seen companies also being part of that particular journey, just to ensure that we raise awareness and kind of articulate that how important insurance is. At the same time, we did, as FSD Africa, we worked with the insurance regulator in Kenya to ensure that innovation is adopted. So, for instance, for the last 1 year, we did conduct a program that was looking at even enabling insurtechs and innovators to invest in the insurance industry, and we've seen quite a number of new insurtechs coming in, and the future is there. These insurtechs are going to reshape how the insurance industry will be in future. At the same time, what the traditional incumbent companies could not be able to do, for instance, pay claims within the shortest time possible, we believe by use of technology and insurtechs coming in, we will be able to see companies paying or insurtechs paying claims within 90 seconds.
Yes.
For instance, in some other countries, claims are as easy as the way you buy an insurance policy. Now, in Kenya, it's totally different. It's when you buy an insurance policy, and when it comes to claim, it becomes a different ballgame. But with the rise of technology and insurtech, we are able to see that particular growth. So what do we need to do in terms of policy and regulation? We need to fully implement prudential regulations, particularly on risk-based capital, and ensure that companies carry risks and companies as capital commensurate to the risk that they carry.
Yes.
Secondly, we need to work on market development. We need to continue catalyzing the growth of insurtechs within the industry. We need to ensure that we invest on these particular insurtechs, and also we need to give them a space to test their solutions, because without them, their innovations, then it is a very big challenge to see whether this particular innovation should work. I know with the insurance regulator, we're working around the sandbox regulations and for allowing innovators to test these particular solutions. But this also should send a signal to the incubators and the likes of Washington and Anthony, because one of the key things that they need also to do, they need to ask themselves, are we still on the right space by still doing the business the way we are doing it in a traditional manner? Because in the next couple of years,
yes,
we're gonna see a completely change of the landscape, and maybe the next person that we will be having in this panel is a chairman for the InsurTech Association, and,
yes,
and maybe the brokers and the intermediaries might not be on this seat. So it's something that we will wait and see how this is going to happen in the future.
Pretty much.
Thank you.
Now, just before we take a short break and then come back and talk about that big one, regulation, and two issues that we're going to focus on is the tussle that has been going on between the brokers and the insurance companies in the country, and that adequacy. We do know that IFRS 17 is on the way as well. But just before we get there, Gabriel, I need you to respond to this in just 2 minutes, if you may. I mean, this number, 2.3%, is it also a reflection of just what even our investors feel about insurance companies in the country? Because you can see that growth in Q2 of 2021, when it comes to quoted ordinary shares, Gabriel, it is just 5.3% composition, a big disparity from government securities of 74.7%. Is it a perception issue that we're fighting with in the economy, all the way from investors to adopters of insurance within the country?
You're correct. I'd use a different word from perception. It's really psychology or how people view risk.
Yes.
Because risk is how then you view it. And whether you choose to transfer it to an insurance company or absorb it. So and sticking around the 2.3% number, what needs to happen is the insurance sector needs to come up with tools and ways to onboard the people who have chosen to absorb the risk.
Yes.
that being obviously an unwise decision in the long term, to allow them and to give them a way of transferring that risk to the insurance companies. Basically, they need to come up with a different way of packaging the products and marketing them to that segment. And I think Adelaide mentioned about data. So there needs to be an entire study of the informal, especially the informal segment, which is quite huge and tends to suffer more in the events of risk. So they need to then approach that segment very differently. Quickly for the investors, I think the numbers I always look at are the returns on assets and the returns on equity.
Yes.
Returns on equity have actually not been that bad. We saw 9.9 in 2019. 2020 it came down to about 5.4%. That's the return on equity. Return on assets, unfortunately, has been very low. So for investors, it's really the dividends, it's the capital appreciation
Yes.
at the listed market. So that, again, has remained depressed. So whether it's, like I said, we have the fundamental challenges that whether it's through regulation or through serious studies of the population that will then advance income and returns of these companies. Those issues need to be tackled before we can even start enticing investors.
Fantastic. All right. Now, Anthony, you hear what Washington is saying. And when you look at some of the insurance companies within this country, even it was trying to address that part for why this number is stuck at 2.3% at a time when everything in the economy is pointing to a proper growth within that industry. Isn't that even 70% of the insurance companies within the country now should not be allowed to operate by the regulator? But we have seen exactly what the regulator has been trying to do, because we do know that capital adequacy was a challenge. We did have the deadline being given out to some insurance companies within the country. COVID came, was a bit relaxed, was trying to look at really how we're coming out of it. Now we're out of it, and we do know that IFRS 17 is also impending, that it's going to look at proper accounting procedures within the insurance industry as well. That important part, regulation, is it an area we should look at seriously? And when it comes to understanding regulation, with either bringing in more insurance companies into the economy or de-insuring the economy so that we have a proper perception of the business. That's one area that we're going to start with Anthony Mwangi once we come back here on a business. And remember, we're looking back to 2021, looking at how the insurance industry has fared on within the coronavirus pandemic, and still in it, but how we reconfigure it once we come back here on a Metropole Television.